Does the clicky thing work, or I tell you to change it? Thank you, Michael. And just a quick introduction for everyone who we hopefully have still online. Hayden Aldredge, manager from ISF Advisors. We are a strategic and financial advisory group working across food systems, and also have a quite ambitious research agenda, much of which is focused on the agri-SME space. So staff and member ourselves, really looking forward to talk about this engagement, and it's been a great couple of days here, meeting everyone in person and hearing everyone's comments online. So a couple of caveats prior to getting into this. First being, I recognize this is the final presentation of the day and the 2 days. So I'll try to keep things tight, and if I see any kind of people nodding off, I won't call you out by name, but just know that I noticed. First big caveat is everything that we talk about here is focused on sub-Saharan Africa. That was the kind of parameters of the research engagement. I know there's been a lot of discussion, especially being based in Mexico this week, around kind of broadening a lot of research and engagement into Latin America, but also more globally. That is a goal of, and I'll kind of get into the bigger process that we're trying to cover here, but that is the goal of this engagement eventually, is to try to make this a little bit more of a global exercise. But for your context, everything we talk about is sub-Saharan based. The second big caveat that I would say is this is ongoing work. We are hoping to have a final report done by early 2023, so January or February 2023. So not only is a lot of the work kind of ongoing, but actually, as we'll get into, much of the analysis and the research has been based on working with 15 different BDS providers as case studies. We actually have a big workshop with them in about a week and a half, where we will go over all of these findings with them together. Unfortunately, we feel as if we don't want to make public a lot of the findings before doing that with those providers. So a lot of what we'll talk about here are objectives, kind of overview of the the basis for this engagement, and then really looking at the process and what it's taken to get to what we'll talk about, because we actually think much of that is a key takeaway in of itself. And then finally, a few key emerging insights and findings, but that will be, again, relatively limited, as much of it's still ongoing. So to kind of hop into things here, so big picture, we can go back one slide, sorry. So the kind of big picture of what we're trying to accomplish with this engagement is building off of an extensive kind of base of existing research, looking at business development services, and trying to fill some of the kind of, they're not gaps necessarily, but opportunities that we have acknowledged to evaluate the effectiveness and the cost efficiency of delivering business development services to agri-SMEs on a more standardized and quantifiable basis. So on the right-hand side here, we just kind of pulled out a few organizations that have put together incredible research that exists, much of which is focused on delivering BDS, how to make it more effective, how to kind of the best practices. And that research is really great, and we think provides a really great kind of jumping off point for what we want to do, where very ambitiously trying to take a space that is inherently kind of subjective in some ways and nuanced and case by case, and try to create a system by which that can be analyzed a little bit more standardized and quantifiably. So, and I'll get into some of the more objectives soon, but next slide, please. So the kind of context of this came about from a group of organizations that now make up our steering committee, a number of whom are SAFN members, one of whom is the SAFN network itself, having this discussion for a number of years now, right? And I think everyone in the room has also had these discussions of how can we kind of further and more efficiently evaluate BDS provision And this conversation kind of led to this steering committee, which is made up of SAFN, AGRA, Small Foundation, AMEA, Argidius Foundation, and Agriterra, to put together a scope of research that they brought ISF Advisors in on, to really try to dig into this more and see what we can do in terms of creating a more standardized kind of way to assess BDS provision. Just a bit of background on ISF. I'm sure hopefully many people are aware of us, but strategic and financial advisory, but also importantly, kind of our research agenda. We've worked with SAFN in the past to develop the Agri-SME taxonomy, which has been referenced numerous times throughout the last couple of days. Our latest State of the Sector report published earlier this year has looked at the kind of global supply and demand of financing going into Agri-SMEs. So we really viewed this engagement as a natural kind of next step and a logical kind of area where we can kind of pursue our research agenda. Next slide, please. So what are the kind of key objectives that we're searching for with this agenda? The headline is that we're trying to identify and assess both the efficiency, so really cost efficiency, how much does it cost to deliver business services, business development services, and the effectiveness of various BDS tools and methodologies and models. But that's a very big kind of broad picture, obviously. So these kind of specific engagement goals get into some of the areas that we really want to drill into. The first and foremost is acknowledging kind of the base of research, especially around kind of segmentation and all of the different ways of thinking, not just from a research perspective, but also a delivery perspective that's gone into segmenting the world of Agri-SMEs and provision of BDS to those Agri-SMEs, and building from those segmentation approaches to make a more kind of fit for purpose approach. The second is really, I think one of the key ones here is, okay, how are we going to do this, right? How are we going to come out with these insights and these takeaways? Well, the answer is we've been tasked to develop what we're calling a benchmarking tool, which is essentially a way in which we want to standardize the assessment of BDS in terms of measuring efficiency and effectiveness and impact across a number of kind of BDS business models and kind of categories. And so I'll get into that, what does that actually look like? But really what it is a set standard Excel analysis of BDS providers and the kind of costs it takes them to provide BDS on a enterprise by enterprise level and the impacts that they see. So revenue, employee count, capital raised are some of the key ones there. And really understand from a standardized basis, if you pop in, let's say a handful of BDS providers, they'll kind of pop out a standard way of measuring those things, which we'll get into some of the inherent issues around that. That hopefully leads to a better picture around best practices and methodologies that you can kind of see based on that benchmarking tool. And then finally, this kind of fourth point on the bottom of the screen, I think is one that the steering committee and ISF, all of us kind of knew was important going in. And I think the further we dug into this over the past 5 months of this ongoing engagement, we've realized actually this might be one of the key points, is we want this to be step one in a longer, bigger process of creating a more standardized and quantifiable assessment ecosystem for a BDS provision across the food and agriculture space. So essentially taking a space that is inherently subjective and case by case and almost inherently impossible to go apples to apples, and trying to make it a little bit more standardized so that everyone in this room and everyone across the space can kind of understand how things compare to one another. And we've done that. We've kind of taken the first step with this project where we've looked at 15 providers. We've developed all of these things we'll get into, but some of those insights and findings that we've come out of this are important and we think are interesting, but I think just as important are the kind of processes that we've gone through to collect the data, to analyze the data, and where that process can kind of be applied to a bigger picture, right, across the space. And one of the kind of, the parallels that we see is with CSAF, right? And we now know it to be a very well-functioning kind of group of lenders coming together. You're able to compare across one another. They're able to compare kind of best practices. That didn't start, out of nowhere, right? That was a process to get to that point, to have lenders work together to kind of understand and kind of standardize across various topics and categories. And so if we can kind of get the BDS space, it's not perfectly similar to the social lender space, but if we can get the BDS space to something similar, that would be the ultimate goal that I think all of us would be thrilled about. So just kind of quickly want to run through, okay, those are big picture goals. Some of the kind of research questions, it gets a little, there are a lot of questions that we want answered, and I'm sure some of these will be interesting to kind of everyone in the room. But number one, want to understand cost drivers of the actual BDS provision and understand the best practices of making those cost drivers more efficient. Number two, looking on a quantitative basis how effective BDS providers are at achieving desired outcomes. So I think that's an important one, right? We want to acknowledge that not all BDS providers are seeking the same thing, but we want to understand kind of quantitatively across those different outcomes, what are some best practices to drive, high impact. Number three, really trying to drill into this concept around where are things inherently need grant funding or subsidy, and where can things be more kind of commercially viable, right? And where can BDS provision actually have a commercial element to it? And so a lot of the analysis and research we've done is looking at, are there different models or segmentations of approaching SMEs that kind of drive differences there. Related to that is, how do the actual kind of cost coverage of the services covered by the SMEs themselves, so that organizations receiving the BDS, how does that kind of change the cost and the effectiveness? And then looking really qualitatively, big picture, what are the kind of key challenges that these providers are facing, and what are some kind of tools, technologies, partnerships, best practices that can kind of help mitigate these challenges or drive success. So I just quickly want to run through, it's a very ambitious kind of research topic that we've covered here. We have a lot of goals and outcomes. And I think this gives a good picture of thinking about who the target audience is for kind of the final output of this report gives kind of a good context. So, we've kind of broken it down into these three topics or categories of BDS providers themselves, funders / governments, and then more private investors or funds. And the use cases for each of these, like we kind of view the results of this engagement to be able to be used differently across these three buckets. So BDS providers, they can use this to benchmark themselves against peers. They can kind of identify best practices, segmentation approaches. And then finally, I think really importantly, they can use this ultimately as a tool to engage with funders or donors to say, this is how we can kind of measure ourselves against our peers, and you can do the same. Funders and governments, again, that's a key kind of way that they can use this work, but also creating the kind of transparent expectations around costs and also effectiveness, but really around costs, right? Where if you want to achieve a certain outcome, if that's supporting access to finance, BDS in a specific market, ideally, this work will kind of give you a bit more of transparency around, okay, how much does that actually cost, right, on a provider level, and then also even drilling down into if I want to address 100 SMEs. And it also kind of gives you guidance on how to improve performance in your own kind of existing portfolio of BDS providers you might support. And then finally, kind of private investors, I think it could be a really useful tool to understand kind of where and how to source pipeline and kind of thinking about this from a more commercial perspective, working with the BDS providers themselves to understand, okay, how can we kind of come in and introduce a bit more of a commercial lens? So I just quickly want to run through, okay, what are we actually kind of working towards for this engagement? Because there's a lot going on. Number one is a kind of final public report. As I said, this will be published probably late January, early February of 2023, where we run through the results and findings from the analysis on the 15 case studies, but also qualitative takeaways, a really in-depth literature review to make sure we're building on that really great base. Just a note that public report is going to be highly anonymized across those 15 providers, and also kind of do the high-level executive summary for the more kind of internal report that we will give to the steerco. But look out for that. We're really excited for it, and continuing to kind of work on that in the background. The second is the benchmarking tool itself. So we envision this to be a publicly available Excel sheet, essentially, where if you can kind of, if you're a BDS provider, put in inputs around cost and performance and impact metrics of the enterprises that you're working with, and it basically spits out a dashboard of results, right, around certain key metrics, which I'm sure kind of internally, well, we kind of assumed, internally that might be kind of standard. What we found is actually it's not, and I think this will be a really kind of helpful way to standardize across different providers the metrics and the results that they're looking at. And that on the bottom left there, just for the 15 providers that we're working with, we will provide them kind of individualized dashboards of all of their data and the results, and we'll do that actually at that workshop that I mentioned, which is happening on December 7th. And we're really looking forward to that, to dig into all of the results and the data, where we've done that on a one-on-one basis with each of those, but getting them all in the room together so they can kind of compare and contrast against each other and provide feedback, and we can further refine. And then finally, the final kind of piece is thinking almost on a process basis is what we've discovered, right, is we went in thinking, okay, there are going to be differences across all of the inputs that we want to collect here. I think we didn't really understand the scale of those differences in some ways, and the data collection process was candidly, I think, more difficult and had a few more kind of hurdles that we had to overcome than maybe we expected. And so the final kind of piece would be a data collection template and a framework that could enable BDS providers to kind of understand moving forward, okay, I account for costs internally in this certain way, but if I want to be able to go to a donor and say, hey, using this benchmark, I kind of come out on this on a relative basis, I just need to account for my costs maybe slightly differently, or more accurately, or actually it's around, okay, I work with one enterprise, I actually need to make sure that I really am collecting their employment growth, when I work for them, rather than just collecting revenue growth, right? I should do both. So that's where the kind of process guide for providers moving forward, I think, really plays an important role in kind of building this broader assessment ecosystem. Okay, so talked a lot about the goals and the objectives and what we're trying to accomplish. I want to spend a little bit of time talking about what the actual process has entailed since June of this year leading up to now. And I think a lot of times, when someone talks about process, it's not the most interesting thing. I actually think this is a key takeaway in of itself, to understand what the processes look like and to understand certain successful areas of that process, but probably more importantly, key pain points where moving forward, we can kind of mitigate against those pain points to make assessment and standardized kind of quantified assessment more easily and readily available for everyone in the space. So just a quick kind of brief overview of step one. We wanted to work on kind of framing this whole thing. We agreed upon, okay, let's do this with 15 case studies of BDS providers working in sub-Saharan Africa. We've kind of split that into West Africa and East Africa. And then it was really important for us to build off of the work that we did at the SAF and Agri-SME taxonomy, to acknowledge that not all BDS providers are themselves the same, obviously, but not all Agri-SMEs that they're working with are the same, obviously. And so we wanted to make the analysis as kind of comparable to one another as possible, but also representative of the broader space. And so you'll see here, tough to read for the people in the room, but these are different segments of both provider level, but also on enterprise level. And we wanted to make sure that it was kind of a representative, those 15 providers that we saw were representative of the broader space. So 8 of the 15 are local, we have defined as local providers, for instance. Those are providers working in the kind of specific market, working and based in the specific market that they're based in. 7 of them are large global providers. That's important to us. We really wanted to make sure we had that kind of even split, and in some ways almost over-index on the local providers. There's the geographic split between East and West Africa. There's a split between, okay, providers that are focused on enterprises, providers that are focused on farmer organizations, as was referenced a bit ago. There's a bit of a blurred line between those two, but we wanted to make sure we were getting representative samples. So we kind of went through all of those segments, and those are the results there across the 15 providers. And that was a really important way to just kind of conceptually frame, okay, how do we make this as kind of apples to apples within each of these segments as possible, right? So if we're comparing a global provider working with farm organizations, it doesn't really make much sense to compare them to a local provider working specifically with processors in a totally different market. So this was an exercise to ensure that kind of mitigated for that as much as possible. So then the next stage was data collection. And I've kind of referenced this already, but this took a tremendous amount of effort and time, where we worked with 15 providers on a really detailed basis to collect kind of 3 levels of information. So the first would be kind of the general provider info, name, headquarters, all of the kind of basic info. And then an enterprise level data where for each enterprise that they've worked with, understanding a bunch of different things from qualitative, so how they themselves kind of consider them, their growth profile, are they more of traditional business, high growth, the stage that they're in, the actual kind of type of SME they are, the type of service they received, all of that information. And then on a quantitative level, the actual kind of dollar amount of the cost to provide the services to that specific SME, all of the kind of measures of revenue, employment, capital raised, all of that on a basically line item by line item for each enterprise. And then finally on a provider level, looking more at kind of costs, revenue they have, bigger costs like indirect versus direct. So face a lot of kind of key challenges here. First and foremost, there's just a key fundamental difference in the sophistication of data collection, the way people kind of view their data, even providers that might have incredibly kind of in-depth collection around their impact metrics of an enterprise A had this much revenue in the first year we worked with them and this much in the 5th year, and they tracked everything. Actually, on the cost side, they didn't track anything, right? And so we worked really closely with every provider to almost go line by line and understand how could we kind of mitigate for some of these challenges. And it ultimately came out with a data set that I think we feel reasonably confident about, but it took a lot of work, right? And I think this is the area where one of the key takeaways of this work will be, and when you kind of see the final report is, okay, how do we make this easier, right? How do we have it so an ISF Advisors doesn't have to necessarily kind of sit there and handhold a provider through this process? How can we kind of produce a way for which providers can just easily kind of know what data they need to collect, how to collect it, and then ultimately what it will be used for? So the final kind of step of the process, which is still ongoing, is just kind of the analysis and the synthesis of everything. So we've used, and I'll kind of take a step back here. 15 case studies, 15 providers. There's kind of 2 different data sets then that we're looking at to actually have some of these findings and results. The provider level, where we're seeing, okay, across the 15 providers, comparing, against each other. So, okay, global versus local, or whatever the case may be, where they focus. But then also the kind of enterprise level. So basically combining every enterprise that each enterprise gave us, or each provider gave us, into one data set. There are kind of pros and cons of both of those, right? The provider level, it's a small sample size of only 15, so sometimes some of the things might not might be out of whack a little bit. So say if we had 500 providers we're working with, that would be great. The enterprise level, we were collecting different numbers of enterprises from different providers just based on availability. So some gave us 5, some gave us 80. So the enterprise level might kind of overweight those that were able to provide us 80 versus 5. So we've kind of mitigated for that by, for different kind of cuts and ways of analyzing, we use one or the other, but I think that's just an important thing to flag. And we looked at a number of different metrics, and I can get into those on the next slide there, but really on the basic thing, it's cost per enterprise, the types of cost on a provider level, so indirect versus direct, things like that. And then in terms of kind of impact or effectiveness, it's revenue, employment, capital raised, really looking at that kind of, okay, what was the annual revenue growth and overall revenue growth for the enterprises they're working with, so on. We also spent a significant amount of time kind of digging in with each of the providers, as well as with our SteerCo and a few others, of kind of qualitatively, okay, we're seeing stuff in the data, obviously, but what are the best practices that we're hearing? What are the kind of key methods? What are the tools? And so really kind of combining the qualitative and the quantitative, and that'll come out in the final report. And finally, kind of synthesizing that all together, and that is still ongoing. And we're looking forward to the workshop with the providers in a couple of weeks to really kind of firm that up a bit more. Okay, so apologies for a bit of a crowded slide here, and it's not the easiest to read in the room, but what we kind of wanted to land on was give a little bit of a taste of some key takeaways and emerging insights. So on the left-hand side, I won't run through all of these, and I think kind of take some of this with a grain of salt. But I wanted to give a picture of, okay, when we think about cost efficiency or effectiveness, what are the kind of actual metrics that we're looking at, and what does the data set as a whole look like? On cost efficiency, the first would be, cost per SME served, and really understanding that there's a difference between, the size of the SME that's being served, right? So there's a ton of different ways and cuts to understand. It's not simply, okay, it's cost $2,700 per SME, which is the kind of median cost in our 600 enterprise data set. That varies significantly, right? Based on the size of the enterprise and all other things. And the same can be said for kind of the effectiveness measures. Our key ones are kind of average revenue growth. So if you look at from year 0, so the first kind of pre-intervention to the year 5, that's the time frame. Understanding on a per annum basis, what's the revenue growth look like, and the same for FTE growth, and then finally looking at capital raised. And we have a bunch of kind of more detailed sub metrics within these. As I said, we didn't necessarily want to show too much prior to engaging with the actual providers, because we want to ensure that they feel good about what we're putting down on the screen. And the key thing here is all of these are then able to be cut and analyzed segment by segment, and in all these different ways, right? So we have all of this data, tremendous database that we can then understand, okay, what if we look at things by stage or by growth profile or by scale and growth profile? And so there's a tremendous amount of different ways to look at this. And a lot of the kind of takeaways and insights are still, coming together. And part of the issue, right, is parsing through what is being driven by the relatively small sample size, what we feel good about, and part of the discussion with the 15 providers is to really work through that as a group so that we do feel good about what we're coming out with. Some of the key things, just to kind of give you a quick taste here, the size of the SME served is a key cost driver. I think that's pretty intuitive. I think people would kind of realize that, you serve larger SMEs, it takes more money to kind of do that. And then conversely, smaller SMEs often kind of have a higher rate of, revenue growth and employee growth, right? But that's obviously missing the fact that if you're going from a smaller base, you'll have better growth. But there's some really interesting takeaways around, who's then serving those different sizes of SMEs, right? And again, not a surprise, but if you're a global provider, what we've seen is really often going more to the higher end of the M in the SME, whereas local providers, and we worked with some really small local providers who, are a handful of people working in one organization who are really trying to reach, the small and even at times micro and transitioning to small enterprises. And so there's some really interesting kind of takeaways around the cost, the type of cost within each of those and how you can deliver those services. But that's kind of the big picture. We also looked at kind of service delivery model. So are you delivering it one-on-one, individual, in a group basis, in some sort of blended basis? Again, no kind of surprise here. The group delivery is the least costly, but there's actually not much performance difference between individual, group, and blended. So a lot of people would tell us, you know, I like to do individual because I feel like I get more impact, but when you look at the actual quantitative impact, you're not seeing that much. One of the interesting things there, though, is there's a much higher willingness for the SMEs themselves to pay for kind of a one-on-one service, which is an important takeaway on its own, right? It's just a little bit more of a kind of commercially viable approach to things. There's a difference in stage, similar to kind of the scale, but more mature businesses typically cost more to serve. That's also reflective in the type of BDS that they're getting, which is the final point there, where core business support as a kind of type of service, which is trying to touch a bunch of different things in an organization, is actually more expensive on a per SME basis than, say, access to finance support. Part of that, though, is driven by many kind of later stage and more well-developed companies are seeking kind of more comprehensive core business support, whereas some earlier stage and smaller companies are actually seeking access to finance, thus some of the kind of cost difference there. So as you can see, there's a ton of different ways to kind of look at this. We're really excited about the data set that we have. However, we obviously kind of, and I think, you know, Michael was saying the same thing here, right? We acknowledge that this is a bit of a work in progress, and the relatively small sample size and potential kind of skewing of the data in certain kind of instances, which we really try to mitigate for, but at the end of the day, you know, working with 15 providers, there's just not as much as you can do. We want to acknowledge that the takeaways that we will have from this report will be interesting, will be good, we'll answer these questions, but again, we view this as very much a first step in a broader process of trying to make this a more kind of effective ecosystem of assessment. So the last slide here. So I just wanted to give a quick kind of overview. I've referenced a few, you know, future dates and deliverables, but wanted to give a quick kind of overview of what that timeline looks like, the deliverables we're working towards. First and foremost is that convening workshop with the BDS providers. Really looking forward to that. And then the final report coming kind of end of January, early February. And then finally, which I think is the key thing, is, you know, we're really focused on having an effective and strategic dissemination plan around this work, where we want to kind of reach the specific target audiences that I listed, you know, earlier, and make sure that we're kind of getting the right message to them, all in the kind of effort of, yes, here are the takeaways and the results that we're seeing, but also in this effort of building the broader kind of awareness and ecosystem of making this a more kind of standardized way of assessing BDS. And so really trying to get that, you know, answering the key question of, okay, how can we make this a more realistic, you know, assessment technique, and how do we rely a little bit more on you know, make this a bit more of a science and a little less of like an artistic endeavor. So I'll kind of end there. Appreciate everyone kind of, I didn't see anyone nodding off. But the final, and we'll go to a bit of a Q&A, but the one question that I want to leave everyone here with is, you know, where are the key avenues that we should be aware of and that we should pursue to ensure that this work contributes to this broader ecosystem, right? And to make sure that this doesn't just stand alone, but really make sure that moving forward, BDS providers, funders, private funds, whomever it may be, is aware of kind of this effort and is able to kind of integrate this into their own work to build an ecosystem of standardization and quantifying results in a inherently kind of difficult field to quantify anything. So that's kind of the food for thought, and would be happy to hear anyone's answers now or reach out offline after this. But yeah, that's kind of the key question here. So I'll kind of pause there. I think, I don't know how we're doing on time, probably about 15 minutes in terms of the actual schedule for questions or comments or anything.
Thanks a lot, Hayden. I have two questions. I don't know if I missed it at the beginning, but how did you define a business development services? What does it include? So if there are like concrete examples you could give, and maybe if you can think on top of your mind what were like the differences. And the other one, thinking about business development services, what is, for example, specifically offered to agri SMEs compared to other business development services offered in other sectors?
Yeah, I think that's a great question, and potentially one of those where many of us in the room who get a bit too into the weeds here forget to kind of take a step back. So I think, so to just define BDS and the way in which we've defined it, are really services provided to, in this case, agri SMEs to help grow on a number of different levels, right? Whether it's strictly kind of revenue or employee sense, or achieve certain goals like access to finance, or which is, and this is a bit more of a kind of looser term, just essentially become more resilient, right? Which in many ways is just business growth on its own. A few of those actual, okay, what categories are we using there? The kind of top categories, right? And we leverage kind of past work that we've done with Argidius. Argidius has done a ton of work with this as well. Access to finance, core business support, market access, technology and product development, and a few others that are slipping my mind right now and kind of are a bit more niche, but those are kind of the top categories of business development support, types of business development support. I think, as with anything, when you try to segment and categorize a topic that's inherently kind of dynamic, a lot of those bleed into each other, right? But what we really tried to work with the providers was understand, okay, core business support, you know, that's really kind of working with the provider to do certain things to make their business kind of more viable, which leads to maybe certain growth targets they have. Whereas access to capital also kind of relies on core business support, right? If you have kind of a better functioning accounting department or whatever the case may be, you're probably going to have better access to finance, but that's more around the actual goal and outcome of the service. In terms of the specifics around, you know, agri SMEs versus other SMEs, I think it's a lot of what we've heard in this room for the last 2 days around there are specific kind of unique challenges to, you know, enterprises and farmer organizations working in the food and ag space that they will have to kind of, you know, hurdle more so than other enterprises. And I think a lot of that, and what we've seen actually uniquely here, and I think the focus on local providers really got us to this point, was those enterprises working in extremely rural settings, right, where they have a good, you know, business model in some sense, and they actually have a great customer base, and kind of almost the business fundamentals are there, but it's almost an inherent lack of kind of the key, let's say, accounting measures or you know, kind of technical tools that are needed to get their business to a point where they can grow effectively are just kind of inherently lacking. And so having, you know, a provider go out and be able to kind of access that more rural, you know, input provider, or whomever it may be, is a really kind of unique role that some of those local providers and a lot of the global providers with specific programs are trying to say, you know, okay, we're going to access the more kind of rural enterprises that might not have that readily available in an urban setting, you know, if you're located there.
Thanks, Hayden. Really, really interesting, and so many questions, but in a good way, because it just generates a lot of thinking. And I was trying to think about, okay, what do I focus on all these questions I have? So the first one that comes to mind is this issue, just a basic question about international providers versus local providers. And will the data, any sort of information related to quality and impact of services, the international providers versus the local providers? Because obviously there's a cost issue there, I'm sure. International is much more costly. And if we're going to have any information about whether one is more effective than the other. That's the first question. The second question is, will anything, and this is not working very well, by the way, but will the data reveal anything about the effects that cost sharing have in terms of the impact that the BDS services has on the agri-SME? Because that's, of course, one of the standard sort of theories behind effective delivery of BDS services is those agri-SMEs that cost share, that provide, buy into the service more, and ultimately the service becomes more effective. So I'd be curious if that's going to be results of any kind in the work. Let me stop there, although I do have more questions.
Thanks, Frank, and feel free to connect offline. I know we have a limited time here, and yeah, a ton of questions that we're also continuing to look into. So, first question, short answer is yes. We have kind of looked extensively at not just cost, right, but effectiveness. One of the reasons I think that I focused a little bit more on some of the cost stuff at this stage is we feel a little bit better about the results that we're seeing at this stage, and a little bit less hesitant to maybe put it on screen before kind of socializing that with the different providers, because we've seen some really interesting results. And I think one of the things that we're seeing is in certain instances, certain cuts, yes, there are clear kind of effectiveness differences between local and global providers. But it's tough in some ways to parse the drivers of that. If one of the ways to do that is kind of qualitatively getting, insight from the providers themselves, candidly, maybe taking some of that with a grain of salt as well, where some providers feel very good about the impacts that they're having. A lot of local providers feeling as if that very much kind of local-based hands-on training actually does get the impact that a global provider may not. But then you look at the data and you don't see necessarily that much of a difference. So we're still kind of parsing that. I think part of that is really understanding like the sample size here, where again, if we could expand this into 50 local providers and get a little bit more of a consistent story across, because ultimately we really wanted to focus, we wanted to ensure we had local, like small local providers, really getting that, which might be overlooked in other circumstances. The issue then becomes inherently, some of those provide us with data on 5 enterprises versus a large global provider who has 100 enterprises. So there's a bit of a data question there, but there are definitely some insights that we're coming out with, and not to kind of, avoid the question or the answer too much, but I think kind of wait on that because we want to certainly have that conversation with all the providers in the room. And then the second question was, yeah, the cost sharing. Another thing that we collected the data on that. This was a bit kind of noisier in some ways, in terms of different kind of accounting on different enterprise level, which ultimately, maybe some of the ultimate analysis at this point shows some takeaways, but we want to caveat a little bit. What we have seen is, against some of the hypotheses, it doesn't make that much of a difference in terms of the effectiveness. Again, though, there's differences in terms of what they're trying to get at. So individual-based core business support versus, group-based access to finance or something, like there are different cost coverage that we see, and then there are different effectiveness. The issue there is, again, kind of when you cut, sample size becomes a little bit, but that's something that we'll continue to dig into. And we also have a lot of data on kind of third-party cost sharing. So situations in which maybe the SME pays for a little bit, the provider does a little bit as well, and then a third party does a little bit as well. And that's an area where we actually have some really good kind of case studies on an individual provider basis of some enterprises have done that, some have not, and you can see the differences. Again, hesitate to show even on a single level at this point, but we'll show that on like an anonymized basis on the final report, and there's some really interesting takeaways. Okay, I will answer a question from Maurice online here. So I think if I'm understanding correctly in terms of, not knowing which areas BDS was provided, I will generalize that to kind of being the broader, the specific context of each of these kind of provisions, right? And that's really what we've tried to do and try to mitigate for, because completely right? If you look at just kind of the numbers of, revenue increase or employee increase or whatever outcome, it's depending on the context, it's going to be totally different. And so we have all of these segmentations, and we've really tried to drill into making it comparable to one another, apples to apples. So again, if you are an early stage SME and you are receiving core business support from local providers, we have that cut, right? And we can then see, to answer Frank's question, okay, for that segment, what does revenue growth look like for those that cover some of the costs versus for those that don't cover some of the costs? So we've tried to mitigate against that. Again, one of the issues here is inherently that kind of reduces the sample size to then you're dealing with a smaller sample. So that's an area where we acknowledge, we've done the kind of, we've made the effort. There are some of those segments that make sense. We trust the data. And there's some where candidly, we probably won't put down on paper just because it doesn't make sense necessarily. Lauren.
I have a question, but similar, not so different from this and that. I just had a few questions. We're actually doing something somehow similar in IFAD, but we're working, measuring the inputs into farmers groups and how they move through a graduation process. So costing the inputs in and then measuring the outcomes. And my question has to do a couple questions, is the fuzzy parts of the outcomes. Two things. One is, you've got a bunch of different metrics, but for us, for example, for farmers organizations, we would want to have a metric that measures somehow improved cohesiveness, improved management, improved this and that, which you might not need with a pure SME and that kind of thing. So that's my first question. The other question is, because we're more looking at it as a sort of a longitudinal way, we're not as much comparing. We have a big database of farmer organizations within a country. So we do that. So we have 500 or 1,000, which is quite nice. And we have a lot of cost information. That's not a problem. But the issue is that when the people who want to look at this data, who are the governments mostly, we're making this, and IFAD, we're making these investments, soft and also hard investments. What is the sort of the net present value, right? So what is the future thing past 3 years, past 5 years, and how measuring both soft and hard. So I'm wondering if you thought about any of that, and you might want to take this question too, which is fairly similar.
Thank you. Give me 1 second to read this question and see if I can fold in an answer on both. So very similar, right? This idea around, for lack of a better term, the soft impact. We considered it at the start, and it was certainly something that I think we're all very aware of and we know is an important outcome, obviously. And I think there's actually almost two, the question on the screen here, a little bit more around the social impact. Your question actually a little bit, partly that, but also more on even just the business side, the cohesiveness, right? And kind of a core business, the management, exactly. So again, and we had a number of different conversations early on about, okay, how do we kind of said, okay, social impact, that might be difficult to, in any sense, reliably kind of quantify that to where we want to be. So we almost, and I hate to say this, we almost set that aside. And I think, again, there has been a lot of great work. I'll point to Argidius Foundation's scale report and framework around best practices and approaches to BDS that leads to both kind of good outcomes for the businesses themselves, but also kind of societal, social impact. So we kind of set that aside. We spent a lot of time figuring out how can we answer that question around, okay, improved management, cohesiveness of a business. Our kind of conclusion, and also speaking with the providers, is unfortunately, at least at this stage, it was just too hard to do. And again, hate to say that, but we do think that ultimately, okay, if we're trying to do this on a quantitative manner, we already have very hard time and a lot of noise looking at the hard numbers of revenue and full-time employment count. And we actually tried to get like EBITDA margin and various other things, and that was next to impossible in some ways. So almost using that, which isn't a perfect proxy, but a bit of a proxy of almost inherently, okay, some kind of business management cohesiveness has to come together to reach some of those growth paths. But it's certainly a bit of a lack in the actual quantifiable assessment. We have done that kind of qualitatively of talking over, okay, as an organization, great, you measure these things. What else are you measuring? And a lot of times it is that, a management team went from a single person to having a more structured, board, let's say. It's just hard to capture that on a quantifiable level, but it's something that I think we should, again, thinking about this ecosystem of assessment, we need to make that clear where even if we get this perfect, it's still going to lack some of the softer things. And then, yeah, and that's, again, so we looked at that very much. What we tried to do is looking 5 years in the past of an engagement. So if you think about year 0 is the first year of supporting an enterprise. To the best of the provider's ability, we asked them to provide data 5 years before that and 5 years after that. That time frame differs by provider. I think the latest kind of data or the furthest back in the past data that we had was 2017 or 2018, but we actually had good recent data, and we selected from, I think it was 80, 70-ish providers down to 15. So we really tried to get to a point. So then what we tried to do is understand, okay, on a specific time basis, and this is more provider by provider when you look at kind of the individual results, where are some providers having impact within a year versus within 5 years? And a lot of that will change depending on the goal, obviously, right? So it doesn't necessarily answer the net present value question, right? Again, difficult, and maybe that's a goal to have in the future, but we did try to capture that kind of time-based approach instead of just saying, hey, they did some services. We did try to say, okay, year 0 to year 5, where's that impact? Okay. Well, it looks like no one else in the room has a question. Any online? Okay, great. Well, thank you, everyone. I don't know who I'm passing it over to now, but I appreciate everyone's feedback. And like I said, feel free to reach out offline because this is an ongoing process. So for anyone online or in the room, but thanks.
Okay, yay. It falls on me to be the last speaker, and apparently I'm doing this only because Claude didn't show up. Anyway, 30 minutes. No way. I'm not going to take 30 minutes. I wouldn't bore you. Not even. 5. Okay, hopefully this one works. All right, lovely to summarize what was happening today. It's just as well the internet didn't work half the time because I couldn't be distracted by anything else except for the wonderful presentations. Maybe that was on purpose, right? In any event, I really enjoyed today. I love getting into the details, hearing exactly what's happening on the ground with this work and hearing about results of research. And I mean, this is really why we're all part of members of this network, right? If I had to, I'm supposed to be talking about sort of the lessons for today, and I guess maybe I'll frame it a little bit more in terms of takeaways, or at least things that I thought were impactful and interesting, right? So the first is, I kept on hearing over and over, crisis, it's the new normal. I mean, we basically have to start planning for that in everything that we do, especially with finance. Thank God, I think all of the gods out there, that COVID didn't destroy the agricultural financial system in the way that we all thought it was that first day that lockdown happened. I think we were all having panic attacks about what was going to happen to those farmers, what was going to happen to the financial institutions. And it's so amazing that they survived and did as well as they did. Why? A lot of it had to do with some really great policy. Governments did step up. They stepped up, they came up with some policy, both internationally, locally, and saved a lot of financial institutions, saved a lot of companies from going under. Many others still didn't survive, and we're dealing with that. And then, right after that, it was like, and now COVID's not going to end, and so we have to learn how to deal with that. And then, of course, Ukraine came up, but it's the new normal, and we just have to deal with it. I think another thing that really, it just reinforced in me is the whole concept of digital. We all know that it's an absolute necessary tool in order for us to improve efficiency, reduce risk, do the things that need to be done to be able to help agribusinesses be more efficient, grow more on less land, deforest less, reduce costs of getting financing to them. There's so many that are being seeded that are out there, and I think sometimes as an ecosystem we think, too many things are being piloted, too many things are being seeded, but is that really a bad thing? Because now we're actually at the stage where a number of those innovations are merging. And what we're realizing, and it's not one thing, it's not one angle of digital, it's those blended opportunities, those aggregated opportunities, those multi-actor systemic solutions that are being addressed with digital. So I think it's a growth trajectory, right? And I think we're in a good place in terms of where things are going. But I think we're also seeing that digital to underpin partnerships, to underpin expanded coordination, both on the policy side and on the implementation side, is going to be really important moving forward. I heard a lot about supply chain aggregators, and I'm really happy because within Palladium, we've been talking about this concept of a supply chain manager being the key to it all. This consolidated, this entity that plays this really important role that I guess a farmer organization or a co-op should play, but doesn't always play, right? That really provides that value to the farmer and gives a reason for their being. And I think we're seeing the restructuring of major supply chains and a shift to importance of figuring out how to have those aggregators have more central role in getting to the small farmer. We now can no longer act like they don't exist. That era is over. And so now it's all about how do you get to those smallholder farmers, and the aggregators are going to play more and more of an important role. So digital for them, solutions for them, financing for them is going to be really important. I think I heard a lot. I really liked this morning's session where we had the colleagues talking about different incentives and different supply side solutions, demand side solutions, and how they both work. I go to a lot of meetings, or I don't go to that many meetings anymore, but I do hear a lot of donors speaking about what is the solution for their particular country and what will work and what will not. And I think it's really clear that all of these things work, right? Demand side solutions work, right? Having BDS providers, finding companies, giving them services, helping them get financing, helping them become efficient, they work, right? So do providing incentives to financial institutions to get them to lend more. It works. I guess the only question really is how does all of this continue in perpetuity? Because everything that we're doing, there is nothing here that is purely commercial. I'm sorry. We are all the children of the blended finance movement. And I think, and is that a bad thing? I also spend a lot of time with donors talking about sustainability. It must be sustainable. And I think everybody has a different opinion about what that really means. But if they mean really purely commercial, they're in the wrong business, right? This development business, agri-finance, I think we've learned there is no pure commercial startup rollout. It's just, we're not going to get there. And really, it's just figuring out what are the right mixes of concessional versus commercial. But what we absolutely know is that everything does need to be efficient, needs to be inclusive, and needs to be impactful. And what works in the South Asia, I thought that Michael's presentation was really fascinating, really fascinating. And so sometimes we spend a lot of time thinking, well, this works, so let's just take it over here, and it should work, a charm there too. The problems are different, the societies are different, the way things are evolving. So it's good to get that sort of on the ground perspective to help re-guide us in terms of what we think is working. On the policy side, I know that we like to always talk about constraints, but there were some really interesting policy highlights, right, that I heard today. I heard about the food banks that came out of the COVID crisis, certainly a ton of Ukraine supplemental money coming out of the US government. We ourselves have benefited quite a bit, and we're implementing programs in places like Ethiopia and the Sahel. And I really hope that we'll get some good results out of that. But we've heard about partnerships and new partnerships in Southeast Asia and the Pacific that our colleagues in this new hub idea for SAFN, which I think is really cool, really great. But I also heard about, the old policy constraints, right? Governments still haven't, I guess, drunk the Kool-Aid on climate finance, or maybe they're hearing that they need to do something and they still haven't quite figured out what it is that they can do, how they can organize themselves to be more efficient in that regard. And I think that's, no government is absolved from that issue. My own, notwithstanding, we're all trying to figure out how to do this best. But we're working towards, moving forward. I think what is interesting, every couple of years, I've been in the development finance industry for more time than I'd like to admit, and there tend to be seismic shifts in the industry every 5-10 years. Back when I started, there was a literal belief that there was SME finance and entrepreneurial finance, and then there was agricultural finance, and the two were very different. One could always be concessional forever, and the other one really needed to be market-driven. Well, that kind of ended. I think we're still we're at a new kind of level of a seismic shift, which is everything moving forward is climate finance, period. And I think once we kind of accept that as the new normal, just like crisis is the new normal, climate finance is the new normal, we'll kind of just start moving in new directions. I heard a lot about research, how more is needed, more is on what is working, on what's working in BDS, on what's working in finance. I think the initiatives that ISF and the CELI are doing in those areas are really important. More data. Now, whether that data can be used to shame governments to action, I don't know. I'd like to think so. Let's see. But certainly it can be useful into motivating others. And especially in the financial world, I think success of one actor and making money is a powerful motivator for others to get into the business. I heard a lot on products. A couple of years ago, there was actually a real belief that smallholder financing, forget about it. It'll never be something that you could do on a commercial basis. We heard today that, a computer, one program, 3 clicks, you can get financing from $3,000 up to, what was it, $2 million. Amazing. I mean, I think that's incredible. So yes, you can do that. Farmers organizations, guess what? They need working capital. I mean, that's not a surprise to any of us, but I can't tell you how many donors I meet with that push me to really be providing equity, because that's what people need. Well, it's great to have data to be able to show that's fine, but the demand is very clearly this. We have to meet that as well. Long-term finance, I heard that that's really important. Like green climate finance or climate finance, really we should just be saying long-term finance. And also, I'm now like accepting, it used to vex me, but now I'm accepting that green finance is pretty much everything. It's water, it's reforestation, it's renewable energy, it's adaptation, it's carbon credits, it's all. And finally, I think going back to this point about how do we keep this all going and the role of concessional capital, it's going to be important moving forward. There's always going to be donors out there, there's always going to be governments out there, and they're always going to be looking for how they can achieve that positive impact and that inclusive growth, and let's use it. We're lucky to be in a position to be able to access it, and all of the actors that are here working so diligently in this space. So that's what I heard today. Those are the lessons. Thank you, Safin, for this lovely meeting, which was, I thought, really eye-opening in a lot of different ways, and wonderful to actually be back in person in Latin America with all of our colleagues from all these different places. So thank you.
Well, I mean, what else can I say after that fantastic wrap-up other than from the SAFN Secretariat, also very much our thanks for all of you to come here, physical presence. For some of you, quite difficult to do that. We were happy to have you, and I sincerely hope that the 2 days met your expectations. My unbiased view is that it was very successful, and there was a lot of great information that was shared over the past couple of days. I guess the challenge for us in the Secretariat, along with the SteerCo, is to figure out, God, what do we do now with all of these findings and information that are being generated? How can we really channel it into something that's good for the partners, good for the members, and good for the industry? But that's our job, and we'll certainly get back to you on that. So just my personal thanks again, and hopefully some of you will be able to stay for the dinner tonight. I see some of you are leaving, some have already gone. Try to stay if you can. If not, then we'll be in touch.